Hey, everybody. Welcome back to Earnings Call. My name is Jeffrey Beamer, and I'm the Senior Investment Strategist over at ewotrader.com. We've been away for a little bit, but we are back just ahead of a new earnings season that begins next week. But for this week, we have a few key names that we want to go over. And here on this show, we don't talk about markets and whether they're going up or down. We're focused on company and company earnings. Okay. And not only that, but how to make money off of company earnings. All right. So we're going to talk about how to profit from these company announcements. And this first full week of trading during the month of April 2026, it starts with a very light schedule ahead of a new earnings season, which begins next week on really about Tuesday of next week. But as for this week, we're going to kick off earnings on Tuesday with mid-cap names like Air Systems, Levi Strauss, Greenbrier companies. And then a little pace picks up midweek with Delta Airlines. That's probably our key name this week. Constellation Brands, WD-40, well-known name there. And a few other lesser-known names. But we're going to go through the list, take a look at the best potential candidates, which that's what my list is for. And I'm going to give you a new trade opportunity off of this list towards the end of the show. So sit tight. Here we go. All right. Each and every week, we do talk about company earnings. And as I said, this week is very light. In fact, there's only about 56 companies declaring earnings this week. And of those, we're only watching about 7 of them. All right. And that's because we're focused on two key things. We're focused on stocks that are going to be quiet stocks, meaning they have a potential move single digits. Okay. The stock is going to move probably single digits through the earnings, or breakout candidates. All right. Stocks that are going to move double digits, more than 10%, either up or down. We don't know which way, but that's why we trade the strategies that we do. Now, this isn't our own calculations. We use what the option market makers are telling us. Okay. Option market makers begin pricing in these potential moves ahead of earnings into the option prices. Okay. And we use that data to come up with our trade candidates. Okay. So let's begin this week on the right hand side of the ledger with the quiet stocks. Okay. Let me give you an example of what a quiet stock looks like. This is one of my favorites. This is Pfizer. It is notoriously quiet. It just trades sideways, even through its earnings announcement. It has an average move of about 4% through earnings each and every cycle. It just doesn't move very much. This is what a quiet candidate looks like. All right. So, from our list for this week, let's jump in. And really, we're going to begin on Wednesday for the quiet list. And it's Wednesday and Thursday. There's nothing going on today, nothing going on tomorrow, nothing going on Friday. It's just Wednesday and Thursday for the quiet list. Let's jump over to the charts and kind of talk about these a little bit. Delta Airlines is first on our list here. They are going to declare Wednesday, April 8th, before market open. So, first thing in the morning. And the average expected move here right now is about 5% for Delta Airlines. Now, here's the thing. This is interesting because I like trading Delta Airlines, and we use selling strategies, specifically an iron condor. That's the name of an option trade. It's a multi-legged option trade. All right. An iron condor around earnings. And we try to capture premium after the earnings announcement when implied volatility drops. And that's how we profit from our trade. Delta Airlines is normally pretty quiet, only moving single digits. And it's going to take a look back. Okay. So it's looking backwards on this earnings announcement. And then it might give some forward looking guidance. And the one thing that is of concern right now are fuel prices. So that could cause a little bit of movement in the stock. All right. So will it move more than 5% or less than 5%? We don't know. Okay. But we play the odds. All right. We put the odds on our side, and that is how we manage our trades. All right. So Delta Airlines will declare Wednesday morning, April 8th, before market open. And the average move there, once again, is only about 5%. All right. Then we have RPM. RPM is a nice $100 stock here. They will announce earnings also Wednesday morning. The average expected move here is, look at that, 5%. You can see the stock just doesn't move much around earnings. Its last earnings announcement, you can see it gap down and then rallied higher. But in the end, I think it was down like 0.5% on its, or actually up 0.5% on its earnings announcement. That was it. All right. So RPM, a potential good candidate for a Wednesday morning, being a $100 stock, and gives us some options to work with. They will declare Wednesday and an expected move of about 5%. Now, another one that's on our list on a regular basis is Constellation Brands. All right, they're trading higher today, even though the market's up just a little bit. They're up almost 1.5%, as you see. But I'm not really worried about that. As you see, the stocks have been consolidating here ahead of the earnings announcement. They will declare Wednesday after market close, and the average expected move here is about 6%. Now, Constellation Brands, we do trade this quite a bit. One thing to note with Constellation Brand, the bid-ask spreads are kind of wide on the options. So we use limit orders. Okay. We use limit orders for these trades. And I was just glancing over at another screen and just checking. I have a simulated order up, and prices are, even though they're wide, they will come up and they will take your order, they will fill it, and then readjust pricing. So that is one way we combat wide bid-ask spreads. Now, normally trading options, we don't like wide spreads. So why would we trade something with wide bid-ask spreads like Constellation Brands? Well, in the end, if the stock does what we expect it to do, and that is move very little through the earnings announcement, we could be in a position where we don't have to do anything and we let the trade expire worthless, and we get to keep the entire premium. Okay. So we received a premium to get into the trade. Yes, we do have risk. Okay. But if the stock behaves, then we don't have to try to get out with wide bid-ask spreads. We don't have to try to exit anything. And that is one of the very nice things about this particular strategy. Okay. All right. And then finally on Thursday, we have WD-40. And who knew? If you've tracked the stock or you've been doing this a while, like I have, you know that this has been a $200 stock. And you can see it was as high as $250 here back earlier this year. Now it's around 210. WD-40 will have earnings announcement on Thursday, the 9th of April, after market close. All right. The average expected move here is 6%. All right. So WD-40 does have some wide, it doesn't have, I think the bid-ask spreads are okay on this. I was looking at them a little earlier, but it is a $210 stocks. And we like these because it gives us a lot of strikes to choose from in most situations. And they do carry a bit of premium on those. So we do like trading a stock like this. All right. So that's our quiet list for this week. Believe it or not, see, just nice and quick, just 4 companies that qualify, that meet our criteria. Just so you know, an example of a stock that wouldn't meet our criteria is a stock that, say, is trading around $20. Oh, I don't like to trade quiet stocks that are around 20, with the exception of Pfizer, okay? Because oftentimes they don't have the premium available to support the trade, okay? You have to be able to sell enough premium to make it worth your while. And stocks that are $15 and $12, they don't really fit the mold. So I like things really between $50 and $400. Occasionally something a little over 400 will work. But like $600 stock often is difficult to do. Your risk really goes up. But anyway, that's the criteria, is usually between $50 and $400 for the quiet stocks. Okay. So moving on. Now we get to the fun ones. Okay. The breakout stocks. The breakout candidates they get wild, okay, and they are the headline makers. Okay, so what does a headline maker look like? Well, this is Akamai. All right, they don't have earnings this week, neither does Pfizer for that matter. All right, but these are just examples. Akamai is a double-digit mover each and every earning cycle. All right, and it is something to watch. It is really a big mover, and will move double digits. And we've traded it several times. For this strategy, we do straddles and strangles. Okay, so straddles and strangles um, through the earnings announcement. And yes, we are buying a premium at a higher implied volatility. But once the stock moves and goes in the money, either on the call or the put, IB doesn't come into play. Okay, and it doesn't, and it doesn't matter anymore because the option has intrinsic value to it, and no more extrinsic, and that's where implied volatility can do some damage. So Akamai is one of our favorites, but what do we have on store for this week? Well, let's take a look at our list here pretty quick. We have Air Systems, okay, AEHR. That's definitely one to watch, and you're going to see why here in a second. We have Levi Strauss, Greenbrier companies, and that's it. That is it for this week. All right. So our criteria is pretty stringent, only 3 stocks. So let's jump over to the charts, and you can see that stuff is going on. In fact, let me just check and see about the news. You can see what's happening here with this stock. Look at that. It's up 15% today. And that is on, well, that's interesting. That is on an earnings preview. Okay. They don't have earnings yet. Earnings should be on Tuesday. All right. That is when the forecast is for the earnings announcement. I'm looking to see here if there's any other news. Yeah, they're all estimates. So they're all guessing right now. So yesterday, the stock was up 11%. Today, it's up another 18. Yeah, 18%. So you can see this stock is a mover, and the expected move around earnings is 19%. So, looking back, maybe, I hate to do something on a Thursday ahead of a 3-day weekend that involves buying a straddle or strangle, because then you have 3 days of theta decay that can really work against you. But man, Air Systems is already moving. It'll be exciting to see what this stock does after the close today or tomorrow. They do Tuesday after market close is and let me just double check one more source here on Tuesday after the close is confirmed on multiple sources. So even though it's moving ahead of time, it may move big again tomorrow after market close. That's one to watch. Okay. Levi Strauss, another one, believe it or not, this is a mover. Okay. Levi Strauss has an expected move of 11% around earnings. They are going to release earnings tomorrow morning, Tuesday, April 7th, before market open tomorrow. The average move here is 11%. All right. And there's all sorts of things that can go on with a company like Levi Strauss, which is an international company, trade rules and exports and tariffs and all that stuff. It could be cause for the stock to move a little bit more, but we definitely want to price it out. And at $19, that's okay for a straddle or strangle. Okay, that's okay for a straddle or strangle, because that means the options are going to be even cheaper. Not necessarily making for a good trade, but definitely on the good side of the ledger when it comes to cost, because a $200 stock could cost you $2,000, $3,000, $4,000 to get into a straddle or strangle on one of those. Levi, should have checked before we had the show today, but it's probably going to be $100 and something dollars, to maybe $200. But again, even at $200, that is probably going to be more than 11% move that is required for that trade to profit. Okay. really probably need down close to $1 for the whole trade. But yeah, you just got to go and check and see what the option prices are doing. Finally, we have Greenbrier. Greenbrier's a $49 stock. Ooh, bad day today, down 6%. But it is, they will have earnings. Let me pull up my little note here. They will have earnings on Tuesday after market close, and the expected move here is 12%. And it looks like it's already starting. Look at that consolidation going into the earnings announcement. And then these pre-announcements. Let me see if they did a pre-announcement also. I don't know why they would, but let's just check it out here. So, yep, Tuesday after market close is confirmed. And yeah, another preview. Boy, that is interesting. Not something I see on a regular basis, giving a little hints of what their earnings announcements are going to be. Sometimes companies will warn ahead of time. Okay. But it's ironic that we have 2 out of 3 that are having previews to their earnings. So that could be a bad thing. I mean, we could see some movement on these 2 stocks. All right. So these are things to watch. All right. So let's take a look at the list one more time. It's a short one, just 7 stocks that we're focused on. Okay. And really Delta and Constellation Brands are probably the real notable ones. The fun ones to watch would be Air and Greenbrier. Those are going to be the most volatile. But outside of that, it's pretty quiet. So as we do here on the show each and every week, normally I would review a trade from the previous week and show you how we did, but we didn't have a show last week. Actually, for a couple of weeks we haven't, but we're going to be back every Monday now, looking forward. But I do have a trade for you this week. And what is our trade for the day? Well, it's going to be one of our quiet stocks, okay? We're going to take a look at Constellation Brands, all right? What you're seeing on the right-hand side is the risk graph of the trade, and forecasted out at expiration of what it would look like. But right now, we're trying to get about $1.30 for the spread, and we have seen the spread go as high as $1.40 today. Right now, it's about $1.10, and we're at $1.30, and that's why we do limit orders, and that's why even though the spreads are wide and we're seeing the mid price go from $1 to $1.40 to $1.10 to $1.15 all over the place, we're just being very consistent with our order. All right. So I would price out the iron condor. And if you don't know what that is, there's all sorts of information out there. But to tell you what it is real quick, it's selling a call spread, not buying, and selling a put spread on the bottom. Not buying a put spread, selling a put spread. Okay. So a call vertical on top, a put vertical on the bottom, and you combine them together. You can do it as one order. Okay. And it's known as an iron condor. All right. Your broker, who's worth their salt, will definitely know about this. And your margin will be the width of the spread minus your credit. Okay. So if you do a $5 wide spread, meaning $5 strikes between your buy strike and your sell strike, okay, that's your margin minus the credit. Okay. So at a credit of $1.30, okay, then you're looking at $370 for your margin per spread. $370 per spread would be the margin requirement, and that would be your max risk in the trade is $370 per spread. Okay, so that is our show for today. Nice and simple. We do this each and every week. We analyze the markets, and you're going to want to be sure to look back next week for this show, because we have the next earnings cycle beginning with JP Morgan, Bank of America, Wells Fargo. All the big banks are going to be declaring next week, towards really starting Tuesday and on. And we are going to cover it on Monday. So you're going to want to watch and join us again as we analyze the markets and analyze trade opportunities for you each and every week right here on Earnings Call. So have a great week this week, and I'll look forward to seeing you right here next Monday. Everyone, take care.